Hey traders, Raghee here, and let's start off with where we are in terms of the three major indices, NASDAQ, S&P, and Dow. Now, as I go into the remainder of September, the second half of September, post this SoftBank meltdown that we've seen in tech, if there is right now an unpredictable index, I believe right now it's actually the NASDAQ. So if I look at my day trades, if I look at the levels on the daily time frame, short term and long term, NASDAQ has been a much bumpier ride. And I don't know if it's the lingering SoftBank effect. I'm not going to concern myself with the why. What I know is when I look at price action, that has proven to be the case. So then we move to the S&P. How affected by the SoftBank, how affected by the NASDAQ is the S&P right now? And I think it has been better. So if you're building a watch list right now, I believe it's better to be focused on S&P stocks and S&P sectors more so than the NAS. The NAS has for months been the high beta, high momentum, better trending, more resilient index. But since the SoftBank NASDAQ whale was revealed, it's really had a difficult time gaining traction. So why not just stay away from it right now? And I'd say in terms of resiliency, the Dow has been really solid. Now, when the Dow is solid, here's a tip for those of you that like to trade the Russell. When the Dow is behaving, you will oftentimes notice, and this is mostly intraday, but it can be end of day too, but I'll say this is mostly for my Russell day traders. When you notice the Dow has good structure, and here's the important part, when the Dow is the relative outperformer on the morning session, I believe the Russell is much more, well, it's easier to trade. It's much more desirable to look at the Russell on days that the Dow is the relative outperformer. In this case, I'm talking to the upside. So we looked at 3 trades today in the chat room. We took a long in the Dow on a classic opening range breach retreat. We took a long position on the S&P with underlying futures and options. And one of the things I've been really loving about day trading the options, and straight up, right in here, even though the range was narrow, stops are difficult to place when the clearing range is much narrower than the historical price movement range. And that was what we had today. So this kind of stop run is difficult to account for because it takes us below the clearing range low, but not below the hourly price movement range low. Nonetheless, the thing that's able to work here, it gives you a much more elastic type risk management. I say elastic because you can let a SPY option wiggle around while I will not let my S&P position wiggle around. So I'll get out of this. I had to take my medicine, but then the SPY was terrific, right? So a lot of my traders right now are saying, hey, Rog, in this environment, it's making a lot more sense to look at some of the options in lieu of the underlying futures at these levels. And then finally, we had the NAS. And I'll tell you, why were we bullish? Well, first of all, we were trading near the oversold V-score. So think of V-score as support and resistance based on volume behavior, as opposed to, say, a slow stochastic, which would be an oscillator that looks at oversold and overbought based on price behavior, right? So right in here, as the NASDAQ finally got down to a V-score low and the HPMR low. Now, for those of you not familiar with the HPMR, this is a calculation that I created about 7 or 8 years ago in the forex markets initially using the volatility data from AutoChartist. And then I created a simple little arithmetic formula to project the high and to project the low based on historical volatility. And it's a fantastic tool. I've made the calculation transparent for years and years. And so it's simple enough to do if you've got the volatility data to do the arithmetic on. Well, this was the projected low. Here's my V-score. And this was the only NASDAQ buy we took. But I encouraged everybody to focus on the QQQ calls as we sold off to take advantage of that move. So these are the kind of things we're focusing on. And why the long side? Because typically, at least going into noon Eastern, on a day that we've got the Federal Reserve, I don't want to be short in the days going into the Fed and certainly in the morning going into a Fed afternoon. I don't want to be shorts. We focused on the long side, focused on those oversold V-score, HPMR low levels, focused on retreats, and took those longs and pretty much got out at the end of the morning session, which is pretty much your 11:30 cutoff. So that was the day. Hope that helps. I'll see you in the next update.